And while we wait for just a few more people to join us over the next minute or so, I do want to make sure that you all can hear me okay and see the both of us here. If there's any issues, if you can please let us know in the live stream chat, we would really appreciate that. Also, if there are additional questions that were not submitted at the time of registration, please, again, type them up in our live stream chat and we will answer those after all of our pre-submitted questions. But thank you for joining our Solo 401k and Self-Directed IRA live Q&A session. My name is Natalie with Sense Financial, and we are a boutique financial firm specializing in self-directed retirement accounts with checkbook control. Today, Dmitry Fomichenko is joining me, and he will be the one to answer all the questions. Dmitry is the founder and president of Sense Financial Services. He began his career in financial planning and real estate investing in 2000. He owns multiple investment properties in various states and is a licensed California real estate broker. Dmitry holds the designation of Certified IRA Services Professional from the American Bankers Association, and over the years, he has taught hundreds of investment and financial planning seminars and has mentored thousands of investors. Welcome, Dmitry. Thank you for joining and taking the time to answer all the questions during this Q&A.
Sure, Natalie, great to be here with you and looking forward to all the questions. Let's dive in.
All right, okay, first question here is from David. He says, I bought a property in the tax sale under my sole 401k. We are interested in actually moving and living in it. To transfer the property from the 401k to my personal name and keeping everything above board and legal, do I have to realize the income and be subject to the 10% penalty as well because I'm only 56? And what is the value of the house? The amount being realized and the current assessed value or market value. I purchased for $5,400, assessed is $34K, market is maybe $50K.
Good question, David. What you're referring to is in-kind distribution. So you can take a distribution from your 401k or an IRA for that matter. And typically when you take in cash, whatever the amount you're taking out, that's the taxable amount. If you're taken before normal retirement age, then yes, you will be assessed penalties. But in your case, you're taking an asset out. And that's possible, that's permissible by the IRS. You can take the asset out. In this case, if it is a real property, you can distribute the property out. From the 401k, you will have to retitle the property to your own name. And as far as the valuation, you will have to appraise the property, and whatever the appraised value is going to be the distribution amount. So again, you're going to have to appraise it, and you're going to have to retitle it at the time of distribution.
Question from Din. Does 457B qualify for self-directed investments?
457 is a qualified retirement plan. Typically, it's offered by some government agencies. The plan in itself cannot be self-directed, but if you have a 457 from the previous employer, then you should be able to roll that over into self-directed IRA or self-directed 401k.
Okay, a question from David. I was working as a contractor and my contract has ended. At this point, I have no income and might be retired. Can I maintain my solo 401k or are there any changes I need to make?
David, a solo 401k is employer-sponsored plan, so there needs to be a sponsor. That sponsor can be a business, a corporation, LLC, or a sole proprietorship for those people who are self-employed. So I'm assuming you were sole proprietor if your contract ended. So typically you need to maintain some level of self-employment activity to maintain your qualified plan. As long as you're able to do something on the side, it can be just nominal. You don't have to do it full time, but you got to maintain some degree of self-employment activity to qualify. You gotta show some income on your tax return on Schedule C, and then that will enable you to keep the 401k plan active. If you're not planning on keeping any self-employment activity in the future, then you probably need to terminate your solo 401k plan and move to self-directed IRA if you have alternative assets.
Okay, a question from Elvia. Can you explain the difference between a traditional 401k and solo 401k and the steps to transfer to self-directed IRA? And what are the implications on transferring out of a solo 401k to a revocable trust?
Let's break those questions separately. So normally the 401k is a employer sponsored plan. If you're working for a company, for your employer, they may have a 401k plan that offer it to all eligible employees. And if you're eligible, you can participate. So that's just, I guess, a traditional 401k that, as it is known. Solo 401k is a plan that is designed for owner-only businesses. So if you own a business or you're self-employed, in other words, if there's no non-owner employees, then you can establish solo 401k plan for your small business or self-employment activity. If you have a 401k with the past employer, you can roll that over into a self-directed IRA or self-directed solo 401k. If you're still employed, most likely you're not going to be able to move that 401k to out of that retirement plan. You need to check with your employer or the plan administrator, and you ask them a question: can you do in-service distribution for your 401k plan if you're employed? As far as the implications of transferring out of the solo 401k to revocable trust, that question doesn't really make sense, because if you're talking about taking a distribution, you can just transfer it to a revocable trust. You can take a distribution from your retirement account, whether it's solo 401k, an IRA, or employer-sponsored plan. You can take a distribution. Distribution is subject to taxes and penalties if it's premature distribution. And then what you do with the funds after that is up to you. You can keep it in your name. You can transfer it in a trust. You can give it away. But you can just transfer retirement funds into a revocable trust. You have to distribute them first, if that makes sense. And I'm not sure I fully understand your question, but if you need more clarification, feel free to reach out to us, or maybe ask for more clarification in the chat here.
Okay, this question's from Lynn. How much can I contribute to my solo 401k, and how can I determine how much I should contribute?
How much can you contribute? Well, the contribution limit is nearly $70,000 for the solo 401k. So that is the limit. It is based on your compensation or self-employed earnings that you make from your business. How much you should contribute? Well, I can't answer that without knowing your situation. There's a number of factors that will determine that. So that's probably a discussion that you may want to have with your CPA to help you understand how much you should contribute in your particular situation. But there isn't a one answer that fits all. Everyone's situation is different. Everyone's tax situation is different. So you wanna, it's basically a unique answer for everyone.
Okay, next question is from Katie. Please explain the reporting on the solo 401k withdrawal.
Well, if you're drawing funds from your solo 401k, that is a reportable event, and this is also a taxable event. If you're taking the distribution before normal retirement age, you also will realize the penalties. There's going to be penalties on the federal level, perhaps on the state level as well, depending on where you live. But the amount of distribution is reportable using a Form 1099-R for the year in which you took a distribution. For example, if you take a distribution now, which is 2025, then in January of 2026, you will be required to issue Form 1099-R. And that's basically, when I say you, I'm referring to you as the plan administrator. So the plan, the solo 401k plan, is responsible for issuing the form, and you will do this on the part of the plan. We provide detailed guidance on how to do that, and then a copy is sent to the IRS. You get another copy, you give that to your CPA, and whatever amount you're taking out, that becomes your taxable income in the year that you're taking that out. So your CPA will report that on your tax return, and you'll pay taxes on that amount.
Yeah, this question is from Kareem. Can Sense Financial help facilitate rolling over funds in my decades-old Roth IRA to a new QP set up by Sense? And what would that look like?
Kareem, if you have an existing Roth IRA that cannot be rolled into a solo 401k, so your only option is self-directed Roth IRA. You can take existing Roth IRA and you can convert that into a self-directed Roth IRA. There's a couple different options, and I will recommend that you reach out to us and schedule time to speak with one of our experts who can take the time to understand your situation, your goals, and then help guide you and give you the options that are available for you.
Second question from Kareem. My self-directed solo 401k occasionally acts as a bank and lends funds to me for real estate investments, per guidelines written in my QP more than 10 years ago. Do you recommend amending those same guidelines? And if so, when should we amend, and how do we amend those guidelines?
Kareem, what you just described, meaning your solo 401k lending funds to you, that is a prohibited transaction. 401k cannot lend funds to you. What you can do, and perhaps that's what you're doing, is to take a participant loan from the 401k. Our solo 401k plan allows for participant loan. There is a provision which enables you to access up to $50,000 or 50% of your account balance. And the loan can be taken for any reason. It's a 5-year loan and must be repaid over a period of 5 years using interest rate at prime plus 1% and using amortized payments. So if you did that, you're good, you're in good shape. But your 401k cannot lend money to you as an investment, because that will be considered a prohibited transaction since you're a disqualified person. As far as the guidelines, if you are our client, then you have up-to-date documents. So there is nothing that needs to be changed. We are actually gearing up for the IRS requires plan documents to be updated, and we are going to be approaching that deadline soon. So we will be reaching out to all of our clients, and we will be updating the plan documents. But if you're a client of Sense Financial, then you do have up-to-date plan documents, and you don't need to worry about days, and we'll make sure that they are updated going forward.
Okay, a question here from Jagannath. He's asking, how can I change the name and EIN of the company sponsoring my solo 401k?
If you would like to change the sponsor of your solo 401k plan, that's common. It happens. Just reach out to us. We'll send you the form to complete, and then we'll issue a plan amendment changing the sponsor of the 401k plan. Pretty straightforward process, and um, again, we've done it many times, and we can certainly help you as well.
And second question here, how can I invest in a business and what are the rules that limit my involvement?
Can you invest in a business with your 401k? Yes. Can you be involved personally in that business? No, because you're a disqualified person and you're prohibited from engaging in any transaction with this, or solo 401k is prohibited from engaging in any transaction with disqualified person. So um, uh, again, I probably need to know more details about your specific situation. So that might be you might be a good candidate for a consultation. So reach out or send us email with more details. It's possible, but I can't really give you much more guidance here without knowing the details. So reach out.
Next question is from Thomas. How do you charge and what would it cost me to add a self-directed IRA?
Thomas, there's a couple different options to do a self-directed IRA. Our specialty here is we specialize in retirement accounts with checkbook control. And as far as the IRA, there's two options. There is a IRA LLC and IRA trust. So again, you're a good candidate to actually reach out to our team, schedule one-on-one session with one of our experts so that we can take the time to understand your situation, understand your goals, and then based on that present you with the options and give you a recommendation and guide you from there. So reach out and schedule one-on-one call with one of our experts.
This question is from Himanshu, and he's asking, any tax reporting rules that apply to these transactions?
Go ahead and read the first one, Natalie, and I'll answer.
For the provisions of the solo 401k?
Yeah, so because I don't see the transactions. I'm not seeing that.
I don't know if it's incomplete question.
Yeah, just go ahead and read the provisions. Let's tackle
Okay,
those.
so talk about the following provisions that Sense Financial can provide. First one is in plan Roth rollovers.
Yes, we do have a provision for in-plan Roth rollovers in the solo 401k, yes.
Okay, age 73 for taking RMDs.
The RMD is not determined by the plan. This is IRS rule, and you have to follow the IRS guidance. So yes, currently I believe that age is 73. So it's not plan specific. It's set by the IRS.
Okay, no RMDs for less than 5% owners if still working.
That doesn't apply for a solo 401k because if you have a solo 401k, then you're the sole owner or perhaps a partner with someone else in the solo 401k. So that is for the employer sponsor plan. If you're working for a company, then you can avoid the RMD because most likely you're going to be less than 5% owner. But that's not going to work for solo 401k.
Okay. Can you have two unrelated partners in the same solo 401k?
Yeah, that is possible. Solo 401k plan is designed for business owners and their spouses. So in most cases, it's just one participant. In some cases, we have a business owner and a spouse participating. And in a few cases, we've done plans for unrelated partners. Yeah, so if you and a partner own a business together, then you can establish solo 401k plan. It can be two partners, three partners, and I believe we've done for clients that there's four unrelated parties, four partners, and they have a solo 401k. It's uncommon, but possible.
Okay. Do you need a bond if you do this?
You don't need to have a bond because it's the participants are the owners of the company.
Okay.
You have no non-owner employees still.
We might have answered this one, but if you cannot have two unrelated partners in the same solo 401k, can each partner have their own individual solo 401k sponsored by the same company?
You can only have one 401k plan for a company. You cannot have multiple plans for the company, so that will be incorrect.
Okay. And then can each plan exclude the other partner in the same company?
Yeah, so it doesn't apply because you can't do that.
Last one here. Can you exclude companies that are part of a controlled group?
You can't exclude. That's the whole purpose of the control group is to prevent abuse. So if you own multiple businesses, you're part of the control group, and that can be excluded.
Okay, next question here is from Dan. Do you assist with setting up an LLC owned by our solo 401k plan with you? If not, what is the best or easiest way to do so?
That is possible to have the LLC owned by the solo 401k plan. Sometimes we've seen people buy multiple investment properties and they want to isolate them from each other, so they set up LLCs inside of 401k. Yes, we can do that. Our legal team helped with this. It's not common, but yes, we can assist you. So reach out to our office and we'll discuss the details with you.
Okay, question from Daniel. Are there any updates on partnering solo 401ks or self-directed IRAs with others, or any updates on rolling over a Roth self-directed IRA to a Roth solo 401k?
It is not possible as of now to roll over Roth IRA to solo 401k. IRS does not allow that. So this is a IRS restriction. There have been talk about changing that. It didn't go through. I don't know about the future. It might change in the future, but as of right now, that's not possible. And then the first question, partnering with your solo 401k or self-directed IRA. So if you're talking about yourself, you partnering with your IRA or 401k, technically it's possible. It might be possible under certain circumstances, but now remember, you're a disqualified person to your self-directed IRA or solo 401k, and even though it is possible, such transaction might lead to a prohibited transaction in the future because you don't know the future. So you got to be very careful. Generally, I will discourage folks from doing that. And if you decide to do it, you need really some good guidance on how to make sure that you're not violating the rules. But generally, I will suggest not to do that. Just use your IRA or 401k funds to invest separately from your own.
Question here from Lori. What paperwork do I need to file for taking my first RMD from my solo 401k? Do I issue a 1099? I've seen the answers both yes and no to this online, or do I simply take the money out and then show it as income on my tax return?
Well, Lori, whether you're taking R&D, required minimum distribution, or any distribution for that matter, a distribution is a reportable event. So regardless what you're seeing online, this must be reported. So it's a reportable event, and it's a taxable event if you're taking pre-tax distributions. If you're taking ROD distributions, it will not be taxable if you're eligible, if you meet the criteria. But it still needs to be reported. Even though it's a ROD distribution, not taxable, they still must be reported. yes, your plan needs to issue a 1099-R to you and send a copy to the IRS. We do provide guidance on that. That must be done. There is, if you fail to do that, IRS will penalize you. So don't avoid this. Do it correctly.
Okay, question from Greg. I set up my self-directed IRA, but I don't pay myself a salary yet. How do I set that up if my income is sporadic? Do I pay myself the salary and then provide a capital contribution to the company if revenue is low that pay period?
Greg, you mentioned here self-directed IRA. If you have an IRA, uh, anybody can have an IRA. There is no requirements for an IRA. Now, perhaps you meant to say self-directed solo 401k, because if you're referring to the solo 401k, then uh, solo 401k is not for everyone. You must be eligible, meaning you have to have a legitimate business that generates earned income, or you need to be self-employed. And as far as taking the salary, I don't know your situation. If that is the case, if you have a solo 401k, typically if you're self-employed, there is no salary. You just report that on a Schedule C. Now, if you own a company, S Corp or C Corp, or if you have LLC taxed as an S Corp, then yes, you will be required to pay yourself salary. But there is a few gaps here that are missing. So Greg, if you're a client, reach out. I'll be more than happy to guide you, but I need to fill in those gaps and understand that missing information.
Okay, this question is from JD. I'm 69. What should I do to reduce my taxes when I start my RMDs from my 401k? Should I roll over to a Roth 401k, or is there something else I need to do to reduce the RMD taxes?
Well, JD, I'm not a CPA, and I can give you tax advice. So if you reach a retirement age, I'm sorry, if you reach the RMD age, then you have to take the RMD. So you're 69, you're not there yet. If you wish to convert to Roth now, then yeah, the Roth will not be subject to RMD. So that's one strategy that you may explore. But you really need to talk to a CPA, and not just a CPA, but a tax advisor, someone who can help you strategize. Because it's good what you're doing. You're thinking ahead about minimizing your taxes, but you do need to speak with a tax expert on this subject.
This question's from Lisa. I would like more information on structuring TIC with personal funds and Roth funds.
Well, Lisa, the question like this just came up a few minutes before here. TIC stands for tenant's income, and that's when you buying a property together and you take an ownership with your retirement funds. So that's again something that we don't recommend you do, because you're a disqualified person and you're now engaging in a transaction with your retirement funds. It might be possible under certain circumstances to do so. You got to be very careful not to break the rules. And even if you structure it correctly, in the future, it's possible it may lead to a prohibited transaction. So a conservative approach is not to do that. But if you decide to go this route, you probably need to talk to an attorney or like a tax attorney who can help you structure this properly.
Okay, a question from Heidi. What does through payroll mean?
I'm not sure what you're talking about, true payroll. I'm Uh, I think what you might be referring to is when the contributions to a solo 401k. And I'm guessing here because this question doesn't ask this. I'm just trying to read between the lines. Is that contributions to a solo 401k are made in the case of incorporated business. So if you have a S corp or C corp, or if you have an LLC that is taxed as an S corp, then the elective deferral contributions must be done through payroll, meaning your company pays yourself a paycheck, and out of that paycheck you contribute to the 401k. So that's I'm guessing what you're asking. So those elective deferral contributions are done through payroll. Whereas if you're a sole proprietor and just file a Schedule C, or if you have LLC that is taxed as a pass-through, then you still will be filing Schedule C. Then there is no payroll there because you're not taking a payroll as a sole proprietor. So that will not apply. But in case of a corporation, elective deferrals must be done through the payroll. So that's my best guess to this answer.
Question from Landon. I'm currently an independent contractor with an S Corp. The company that I provide services is being sold, and I have the opportunity to become W 2. What happens to my self directed IRA with Sense Financial?
Well, if you have a self-directed IRA, Landon, then it's irrelevant because there's no requirements for self-directed IRA. Now, my guess is that maybe you meant to say your self-directed solo 401k, because if you do have a solo 401k, then I already answered that question. So hopefully you've heard that. If you didn't, then listen to the recording, but we addressed that question in the beginning.
Question from Jay. I need to close the 401k for my company and roll it over into an IRA. I would like to ask about mega backdoor, Roth IRA contribution, then conversion of the 401k with the tax it, then roll into an IRA.
You want to close the 401k and then you want to do mega backdoor. So I'm not sure I'm fully understanding this question because if you're going to close your solo 401k plan, or maybe you're referring to the 401k that you have with the employer. So again, I'm not really understanding this question, Jay. If you want to perhaps clarify that here in the chat, if you're live with us, do that. But I'm unclear what you're trying to accomplish here, Jay. So best to clarify that, or perhaps again call us and let's talk about your situation.
And then there's a second question from Jay. More information on conversion to IRA. Is there anything that we can add to that?
Well, again, it's incomplete question. Conversion what? If you have a 401k from the past employer, yeah, you can convert it to a self-directed IRA. It's called, you basically set up a self-directed IRA, and then you perform a direct rollover. So it's not a conversion. Conversion term is used when you convert into a Roth. You take in pre-tax money and you convert that to a Roth IRA. That's a conversion. But again, I'm not clear what it is, what your situation is, and what you wish to accomplish. So get in touch and schedule one-on-one.
Okay, question from Shrikant. 2 of my multi-family investments that I invested using solo 401k funds got foreclosed. I received the K1s for them. Can you please provide me with some direction on how to realize the loss within the solo 401k account?
If you invested with your solo 401k and that investment resulted in a loss, well, you don't. It's a loss. Loss is a loss. You don't, realize that. You just lost the money. And unlike with personal investments, perhaps you can report that on your taxes and maybe offset some of the gains from the other investments using this loss. That's not the case with the solo 401k. Whether you invest in multifamily investment or you buy stocks, every investment has a risk. So if you lost money inside of your retirement account, it's a loss. That there is, you don't need to report that. You don't need to realize that the loss is a loss. So you're just the value of your 401k just went down by that amount. That's pretty much it. So, but there is no reporting that you need to do. If your 401k has over the threshold to report, which is $250,000, you will report the plan balance or the total plan assets. That will be reflected, that amount. So you're going to lower that. But you don't specifically report any particular gain or a loss in the investment. It just simply reflected in the total plan assets.
All right, those were all the pre-submitted questions. We do have a handful of questions here in our chat. First one here is from PJR. We might have answered this already, but he's asking, can we create a single member LLC for his solo 401k?
Yeah, we certainly that's possible. You can do that.
Okay. From Lynn, do I fund my 401k solo 401k Roth from my after-tax funds?
Well, it depends on your setup there. So you make contributions to the solo 401k Roth, and those contributions are taxed. So you're not getting deduction for those contributions. So yeah, essentially that's going to be after-tax money that you're contributing to the Roth solo 401k plan.
Okay, this question's from Lisa. Can we sell our home to our Roth IRA using right IRA funds to purchase, paying off the mortgage, and then be renters with the Roth IRA as landlord of our home? If yes, what are some of the things we need to be aware of regarding to the taxes?
You absolutely cannot sell a home that you own to your retirement account. You're a disqualified person. That's a prohibited transaction. You cannot rent a home from the 401k. That's a prohibited transaction. You're a disqualified person. So those are just complete things that you cannot do. So absolutely not.
Right, a question from Edwin. Very new to solo 401k. This year I did my deferral election contributions in a traditional manner, pre-tax. If for 2026 I want my contributions, specifically profit sharing and deferral election, to be post-tax, do I need to have a different self-directed checking account with Solera Bank, or can the same checking account be used as long as I keep track of the contribution forms?
You need to keep track of the different contributions separately. No, you do not want to commingle them. You need two separate accounts for the pre-tax and the after-tax contributions. Because even if you keep track of them, it's going to become a mess down the line, and you want to avoid that. You're required to have separate accounts for different types of money in your solo 401k plan.
Okay, question from Jay. I haven't done the onboarding form from Discount Solo 401k. I sold my one-person company in late 2023, and the owner wants to close the plan. Do you offer services where I can perform backdoor Roth IRA conversion, pay the taxes on the 401k, and convert all of my retirement plans through the Roth IRA through Sense Financial?
It's possible to convert. It's not a mega or not a backdoor. It's just a conversion. If you have pre-tax money, you can convert it to a Roth, and yeah, you can have a self-directed Roth IRA. But uh, again, I'm not sure I'm fully understanding your question here, because you're saying that the owner of the company wants to close. So again, best that you reach out to me directly, and I can speak with you and guide you.
Okay, question here from Mark. Can I use my solo 401k for angel or venture investments in startup companies? And or can I use the funds to set up a specific angel fund?
You can set up a fund within your solo 401k plan. You can invest in a fund, but you can invest your solo 401k in virtually anything. The only restrictions to invest your solo 401k plan is collectibles. You cannot invest in collectibles, and you cannot invest in any transaction that involves disqualified person. Other than that, you can invest in virtually anything. So definitely all those that you're listed, you can invest, but you can start a fund within a 401k. That's not going to work.
Another question from PJR. With two unrelated partners, one partner could be less than 5% owner. So, does your plan have the provision for no RMDs for less than 5% owner that is still working?
I need to look into that. So that's probably also a good, you're good a candidate for one-on-one consultation. So reach out and let me get a full picture of your situation.
A question from Lisa. I think we might have answered this question earlier. Can we sell our home to a Roth IRA?
Yeah, we did that.
Yeah, that one is answered. Okay, from Judy. Can you use the self-directed IRA money to purchase REIT or UPREIT? Not sure if I'm pronouncing that correctly.
REIT, Real Estate
REIT.
Investment Trust. Yes, you absolutely can invest in a REIT with your IRA or 401k funds. No problems there. You can invest in virtually anything. So again, if it's collectible is the only restriction. Other than that, you're free to invest in anything as long as you don't have disqualified person involved. Now, if you have a REIT that you're personally involved in running, then that will be a problem. You won't be able to invest in that. But if it's arm's length transaction, then absolutely yes, you can.
Okay. Question from Jay. In addition to my question above, my wife is part of the solo 401k. Her English is limited to or in conversation about such complicated topics, and it's hard enough for me to understand English. Does someone from the staff speak Russian?
Well, I speak Russian, so feel free to reach out to me, and we can chat on this language. Although it might be a little bit more challenging for me, but that's fine. I can certainly help you. Yes.
Okay, a question from Sunny. What if some years the business is at a loss and can't contribute to the solo 401k?
That's fine. You don't have to contribute, Sunny, to a solo 401k every year. That's not required. So if there are years when your business is showing a loss, or if there is a year that you just don't want to make a contribution, you don't have to. You do need to make occasional contributions to the 401k. So you don't want to set up a 401k plan and not contribute in it for 10 years. That will create an issue and raise a red flag with the IRS. But yeah, if you have some years that your business profit is lower, perhaps even negative, you're fine. You don't have to contribute.
Okay, a question from Katie. I haven't paid taxes on distributions this year for my solo 401k. Can I pay that at the end of the year?
Well, if you took a distribution from the solo 401k, you actually require to withhold the taxes. There is a specific procedure on how to do that. If you fail to do this, then you're going to be required to pay the taxes. Yeah, you can do it by the end of the year or when you file your tax return. You everything will be reconciled, and you'll have to pay the taxes.
Okay, a question from Heidi. If there are two owners of the business who are siblings and one account is open for the solo 401k company to contain the money for one sibling, how do you set up the second bank account for the other sibling given that it is just one federal ID number and one name?
If you have a solo 401k with two partners, whether it's siblings or spouses, you do need separate accounts for those participants. Okay, so it's not just the siblings. If you are, if example of two businesses with two spouses, you gotta do the same thing. And yes, solo 401k plan has one name and one tax ID number, but just like you can open two checking accounts for yourself at one bank, you can also open two accounts for the 401k plan. You just need to track them. Our preferred bank gives you the ability to nickname the account, so it's going to be easily trackable. But yeah, you will just open two separate accounts, one for one participant, the other for another one. And then if you decide to make ROT contributions, then you will need two more accounts. So now you're talking about four different accounts. Yes, you have to do that, and it can be done easily.
Okay, a question from Jasmine. I want to take a participant loan, but I have a traditional solo 401k and a Roth solo 401k. Can I take a loan from both, one at a time, or how is this done?
You can, the loan is limited, yeah, so potentially you can pull the funds from pre-tax or the Roth funds. So there is a specific procedure for doing that. We do have an article on the knowledge base that gives you outline how this to be done, but you need to set up an account for the loan, and then you'll have to repay the loan back into that account. But yeah, potentially you can take it from using pre-tax money or the Roth money. You just need to track it.
Okay, a question from David. For overseas land purchase, do you recommend an IRA trust or an IRA LLC? What about as a joint venture?
Well, we don't recommend one or the other. That's something that if you're talking about buying something overseas, depends on where you're buying. To give you an example, if you're buying in Mexico, we have several clients who purchased in Mexico. You will have to form like a special entity in Mexico, like an LLC, but Mexican LLC, to hold that title to that property in Mexico. So you won't be able to do it directly. So in that case, it won't matter. You can do it either option.
Okay, a question from Lisa. Can we buy a home with Roth IRA funds and rent it to qualified individuals where the monthly rent and expenses run through the checkbook account? Example, the rent goes into the Roth account and property tax goes out. And if expenses exceed Roth balance due to no rent, can we pay expenses with personal funds?
You absolutely may not pay the expenses with the personal funds. If your Roth IRA owns the property, all income belongs to the Roth IRA and must go into the Roth IRA. And all expenses must be paid from the Roth IRA. So you want to make sure that you have adequate reserves when you buy a property, so that if there is a month when you have no income or reduced income, you still can pay the expenses, but you absolutely cannot pay with the personal funds. You can contribute to a Roth IRA. You can roll over funds from another Roth IRA perhaps to compensate, but it must be paid from the Roth IRA. And then the first question, I'm not sure what you mean by qualified individuals. So if you buy a home, you can buy investment property, you can buy a home. So home implies that it's your home. So no, it cannot be your home. You can buy an investment property only with your Roth IRA funds, and you can rent it to basically to a third party. You can't rent it to immediate family members and yourself. So that will be a prohibited transaction, but you can rent it to unrelated parties.
All right, those were all the questions for today. Thank you everyone for joining us. Since we did have a lot of questions, we do have another live Q&A coming up in 2 weeks. That will be on October 20th. So we do hope that some of you will join and ask any additional questions that may come up. Or in the meantime, if you do want to speak to one of our experts, please don't hesitate to reach out. We'd be happy to schedule that for you.
Yeah, thank you for joining us. There's been some questions that have been somewhat unclear, so I do encourage you to reach out to me directly or call the office and request a consultation with me. I'm happy to speak with you one-on-one if you're a client, and I want to give you an accurate answer. So I didn't want to, sometimes I try to guess, but other times I didn't want to guess. So reach out and let's chat, and so I can give you accurate answer. Thanks for joining us, and we'll see you next time.